Hello everyone, my greetings to one and all. This is the 7th session on economic reforms initiated in 1991. In the previous session, you have understood the impact of economic reforms on industrial sector, foreign direct investment and disinvestment. I am Poonam Vohra from Egypt Economics Learning Center. This session focuses on the impact of economic reforms on foreign trade and foreign exchange reserves in the country. So let us begin. Let's understand the impact of economic reforms on foreign trade of the country. Trade is the sum of exports and imports of goods and services measured as a share of gross domestic product. As per the World Bank data source, India's trade to GDP ratio has increased from 15.5% in 1990 to 43.4% in 2018. Imports and exports of goods and services has risen as a proportion of GDP. India's exports of goods and services as a percentage of GDP has increased from 8.5% in 1990 to 19.9% in 2018. And so is the case with imports. Imports also. India's imports of goods and services as a percentage of GDP has also increased from 8.5% in 1990 to 23.6% in 2018. Exports of goods and services represent the value of all goods and other market services provided to the rest of the world, whereas imports represent the value of all goods and other market services received from the rest of the world. The exports and imports include the value of merchandise, freight, insurance, transport, travel, royalties, license fees, and other services such as communication, construction, financial services, business services, information services, personal services, government services. There has been a substantial increase in exports from textiles and polished gems in 1991, and today it comprises of computer software, pharmaceuticals, business services, call centers, medical, legal, financial, automobiles, and so on. And there has been growth of specially software, engineering goods, auto parts, textiles, and so on. Similarly, imports comprise of petroleum products, capital goods, pearls, precious stones, iron and steel, fertilizers, and today it comprises of mineral fuels, oils and waxes, precious and semi-precious stones, jewelry, electrical machinery and equipment, nuclear reactors, machinery and mechanical appliances, organic chemicals, and so on. But one notices that the growth of exports as well as imports have been uneven. The uneven growth of exports has been due to the vulnerable demand in international market, whereas import bill has been high due to rise in the international prices of oil and depreciation of exchange rate. In 1991, Indian companies used obsolete technologies and did very little research and development. Today, India has emerged as a global research and development hub. General Electric, Suzuki, Hyundai, Microsoft, IBM, Oracle are few companies using India as their research base. So a tremendous progress has been made after economic reforms were initiated, though hiccups are always there. Let us understand the impact of economic reforms on foreign exchange reserves, which comprise of cash and various other reserve assets like gold. It is held by the central bank of the country and is available for balance of payment purposes. Not only that, foreign exchange reserves also influence the foreign exchange rate of the currency and help in maintaining confidence in financial markets. New economic reforms had favorable impact on the foreign exchange reserves. In 1989-90, foreign exchange reserves were $5.8 billion and it dwindled further during the course of that year, prompting the country to ship out its gold to avoid a default. This crisis led to liberalization of the Indian economy. As the country was experiencing deficit, a low current account deficit helped with accumulation of reserves. There was an increase in foreign direct investment. There was a rise in investment by foreign portfolio investors in the Indian stocks. There has been an increase in the remittances from abroad, an increase in acquisition and mergers. Foreign investors had acquired stakes in several Indian companies. All these factors resulted in an increase in foreign exchange reserves to $37 billion in 2000-2001 and further to $400 billion in 2018-19. So, economic reforms had a favorable impact on foreign exchange reserves of the country. I hope you are able to analyze the impact of economic reforms on foreign trade and foreign exchange reserves in the country. With this, the session comes to an end. The next session would focus on impact of economic reforms on education, employment and poverty. Till then, keep reading, keep learning, keep updating yourself. See you in the next session.